We are proud to announce the 2019 Palisade Global Hard Asset Conference, taking place on Jackal Island from May 16th to May 20th. Speakers confirmed include one of the most successful venture capital fund managers within the resource space, Marin Katuso, legendary mining investor Paul Matizek, former hedge fund manager Mike Alkin, and CEO at US Global Investors, Frank Holmes. All these guests, plus many more to be announced. Sign up now for more details and to be included in our special guest list. Join us in Jackal Island and become part of a growing number of investors who are ready to take advantage of a coming resource boom. Welcome back to another episode of Palisade Radio. I'm your host, Karema Mutlu, and on today's show, we have the editor and publisher of the Daily Gold, Jordan Royburn. Welcome back to the show, Jordan.
Thanks so much for having me.
Let's talk about your latest article, which talks about the possibility of a breakout for gold. And let's go over how general sentiment for gold is perhaps slowly starting to turn more bullish since the beginning of the year. Are we perhaps at the beginning of a new multi-year bull market for gold and silver? It's been a long time coming, but are we there yet?
I think we're very close. I don't think, at least in my work, I don't think we can say we're there yet, just because if you look at the stocks, for example, they're very close to reaching the point where you could call it a bull market. The breadth indicators, how much of GDX and GDXJ are participating in this move, because what you really need to see is very strong participation across the board. That has strengthened in the last couple of weeks, but it hasn't quite gotten to, it's gotten very close, but it hasn't quite reached bull market levels. Now, if we're looking at the price action in GDX and GDXJ, if you go back over the last 8 years or so, you could see that on the daily chart, it's the 400-day moving average. On the weekly chart, it's the 80-week moving average. That those moving averages have done an excellent job of defining the primary trend. And what we see recently in the last couple of weeks is both GDX and GDXJ surged above these moving averages, which is a really good sign. Now, I think the next couple of weeks and the next month or two, it'll be very interesting to see can these mining stocks, can they hold above these moving averages if they correct and come back down some. So that's going to be something I'm watching for. Now, looking at the gold price, gold has not made it up to what I call the wall, which is the resistance at 1350 to 1375. And I'd really like to see gold rally up to the wall here in the very short term, even if it doesn't break out. I think if it can rally up to the wall another time, that's going to be a very good sign. So it's still too early to call, we're in a new bull market, but we're so close. Like, the evidence, especially in the last couple weeks, based on the things I look at, the evidence is really accumulated in favor of the bulls, but we're not quite there yet. One more thing I'm really looking at is gold against the stock market, that ratio, because we've never had a real bull market in gold or gold stocks without, or I should say just gold. We've never had a real bull market in gold without gold really strongly outperforming the stock market. And especially when we get a turn, like when there's a turning point, you really need to see gold strongly outperforming the stock market. And that ratio has made a move higher in favor of gold, but now it's kind of come back and it's consolidating. And if that ratio could just continue to rise or make another higher high, that to me would be a really good sign. So that's really like the last thing that I'm waiting for. And obviously the difficult thing is if you wait too long for all these indicators to tell you, okay, we're 100% confirmed a new bull market, you're going to be buying at higher levels. So I'm not necessarily saying we should wait and buy at higher levels. I'm just saying, based on the evidence, we're really close to a new bull market. We're not quite. There's just a couple more things that I think really need to happen. We're so close. And this is really, the bears out there, I think over the next, month or two, they really have to, if they want to push this market back down, they really have to, because if they don't, then we will see the start of a new bull market fairly soon.
Some analysts suggest that gold has been in a basing period for about 4 or 5 years. And because of this, once a breakout does occur after such a long period, the move itself is more sustained and consistent and stronger in nature. Would you agree with this? And once a move does occur, do you prefer to be invested in a range of mining equities, or is that the time for juniors to really show their leverage?
Yeah, usually the longer that you have a basing pattern, then the more powerful breakout or breakout move you can get. So, I mean, that's certainly possible, but when you get a breakout move, sometimes breakout moves can be sharp and they can just run to the target very quickly, and that can be it. I think the measured upside target from a breakout, I mean, if we take the top around 1375 and the bottom around 1050, I mean, those are not exact numbers, but I'm making them easier to calculate. So based on that, I think you get an upside target of about $1,700 an ounce. So it's hard to predict exactly how the move will turn out because it's possible gold could break out and then just run to 1,700 really quickly, or you could see it run up to 1,450, 1,500. Then you get a big pullback that retests the breakout. Then you get an even bigger move higher. So I guess I'm being too technical here, but the one option is you get a really strong move where you just fly right to the target. The other option is you get a nice breakout move, but then you come back and retest it, and then you get a bigger move after that. But the premise of your question, I do agree with that. I mean, we have been basing for almost 6 years, or maybe it has been 6 years or 5.5, depending on where you start from. And that is definitely setting up for a really strong move higher, assuming we can successfully break above the resistance and keep moving. Yeah, and I mean, the long-term gold chart is really exciting. The bullish implications of a breakout are really exciting because if we make that breakout and we can run to 1,700, it's very likely that we're going to run back to the old high at 18 or 1900, and then you have this. You set up this massive, well, not massive, but you set up a potential cup and handle pattern there, and the upside target on that would be about, if you take 1900 minus 1050, that gives you about 2750. So that's kind of a potential target for the next bull market move. But that target is not, for that target to really be triggered, to use that word, gold first has to break above the wall at 1350 to 1375. Then it has to rally up to 1900. Then it has to break above 1900. So those are the possibilities. Now, with respect to which you should invest in, the junior sector as a whole, it tends to really, it cannot really move until like months after the move in gold and the bigger stocks. There's obviously individual juniors here and there that, they can perform well and they can lead. But if you're looking at the junior sector as a whole, I remember you go back to that 2008, 2009 bottom. The bottom in gold and gold stocks was in late October 2008. And it wasn't even until I want to say March or April 2009 that the junior sector as a whole really didn't start moving. So that's kind of the nice thing about investing in juniors is you can be patient, you can wait for the breakout, and then look for quality juniors that haven't moved yet. But I really think that when we do see gold break above the wall, assuming that will happen, I'm being presumptuous. When that does happen, I think that's the point when you'll start to see juniors really outperform, and I'll also throw silver in there. That's like when you get that breakout, that's when you can see silver and the juniors really start to outperform. And I mean, with respect to investing in juniors or mining equities, it really depends on the person. I'm not a huge fan of buying individual larger companies. I feel like unless you're going to invest in individual juniors, then the best thing to do is just accumulate, GDXJ and silver because they'll perform better than gold. So that's kind of the simple, easy thing to do, I'd say, is accumulate silver and GDXJ. But if you want to invest in, a basket of individual companies, then certainly if you understand the risk and know the sector well enough, I think that picking individual juniors, if you can pick those successfully, those can give you a huge amount of upside. And I'm not just talking about penny juniors that are 5 or 10 cents. I mean, there are some good, really good companies out there that maybe they're trading at $2, $3, or $4, and you get lucky and you pick the best one, or you find another Kirkland Lake. So I'm not opposed to buying medium or large juniors. I just think whether it's medium juniors, large juniors, or the penny juniors, you want to try and just find the best that you can that have the most potential, and then build yourself a basket. That's how, I personally round out my own portfolio.
Excellent. Okay, Jordan, give us a sense of when you first participated in the early 2000s when the bull market in gold and silver began. Let's talk about the sentiment back then, especially from a few of those early years where gold and silver were essentially range bound before they took off. I imagine it was tough to be a contrarian, especially on the back of a huge run up in the tech sector. What was your experience like back then, and what could investors learn from this?
Okay, well, this is very interesting because I got into the tech bubble early enough that I was so far ahead that when it started collapsing, I was actually, it was just dumb luck, but I had sold a lot of things that I bought in early 1999. But during the tech bust, the problem was I kept thinking, this is a great buying opportunity. This is a great buying opportunity. Even though I came out ahead, well ahead in the end, I would have been way more ahead if I wasn't, buying these worthless companies on the way down. That led me to learning about technical analysis. But anyway, I started hearing about gold in the year 2000, and I thought it was, stupid. Why would anybody invest in that? It doesn't make any sense. And then a couple years later, I started learning about commodities, and I finally realized, the stock market's overvalued. We're probably going into a new energy bull market, and that's going to include gold. So I was investing in energy first, but I was watching gold. I didn't invest in gold until 2005. But I was watching it very closely 2002, 2003, 2004. I was just more into energy at that point and kind of waiting for an opportunity to get into gold. So I think that just shows you the sentiment. 1999, 2000, people like me thought gold was stupid. But then a couple of years later, when it started performing, that's when I think it was, there were still people who weren't invested in it. They still thought it was stupid, but it was rising. It was making higher highs. More and more people were investing in it, but there were still a lot of people, conventional investors, conventional Wall Street, who weren't involved in it. They thought it was stupid. So that's kind of what I remember about the sentiment. I feel like now it's been more difficult to be a contrarian over the last couple of years because the stock market has had this, nearly 9-year run. And we haven't seen anything like that since the move from 1949 to 1957. So I think just with the equity market, how strong it's been, how it's kept going and going, I think that's made it even harder this time to be a contrarian. Looking at the equity market, we almost had a new bull market in gold in 2016. We saw the equity correction in 2015, 2016, but that, in my opinion, that didn't morph into a full-blown bear market. It was really a sharp bull market correction, and that's why gold had a good pop, but it wasn't able to sustain it. So I really think this time it's been more difficult just because it's taken so long for gold and the gold stocks to really get into a bull market. They're still not quite there yet. And you just look at the stock market having an 8 or 9 year run. It's been a historic run. And that's leading people to think, we're in the 1980s and gold's going to be dead for a while and the market's going to keep moving. So I think this time it's been harder to be a contrarian than in the early 2000s, because in the early 2000s, you go to late 2000, gold stocks really took off, the senior gold stocks, and they were making higher highs right away. So, you had higher highs in the early 2000s. So what it teaches you about being a contrarian, it's extremely hard. And timing is important. You don't have to time things perfectly, but if you're too early, if you're a year, 2 or 3 years too early in something, especially in precious metals, if you're investing in a company or juniors and you want to buy and hold and you're just way too early, you can lose 50%, and that's not that's very difficult for most people to be able to do. So I would just say don't be a contrarian, because contrarians are wrong most of the time. The time to be a contrarian, you have to get the timing right. And I'm not saying you have to time it perfectly, but you have to, you have to time it within a reasonable amount of time of the trend turning. Because if you don't, you're going to be absorbing huge losses before the turn comes. And so it really depends on the person, because if you just have a little bit amount of money on the side and you're gambling on precious metals and you can afford to lose it, then yes, you can buy and hold. But if you're the average person and you're putting a chunk of your retirement in precious metals, and you need your timing to be somewhat decent, then you can't buy in a year or 2 years too early and absorb huge losses before it turns. So that would be my view on contrarianism. If you're going to be a contrarian, you have to make sure that you're right, and make sure that your timing is somewhat close to the actual turn, because if it's not, there's a risk of losing a lot of money. So timing really matters.
Excellent. Okay, as we start to wrap up the show, Jordan, is there anything else you wish to discuss today? Anything else on your mind?
I would just say at present for precious metals, we're almost there to being in a confirmed bull market. I'm really watching for the gold against the stock market ratio, gold divided by the S&P 500. I'm really keeping my eye on that, because gold is showing a lot of relative strength. It's strong in real terms. Gold against foreign currencies yesterday closed at a 2.5-year high. Another way to look at that chart is gold multiplied by the dollar. Gold against commodities, I think, has also made new highs recently. Gold against bonds is strengthening. So as far as the relative strength for gold, I want to see gold really strengthen again, make a higher high against the S&P 500. That, to me, if we see that ratio really firm up in favor of gold and it makes that second leg higher, that to me is going to be a real significant indicator that we're going to see a big breakout in gold sooner rather than later, and we'll see this bull market start. So we're almost there. I'm just I'm watching for that, and I'm also watching the Fed, because the Fed is in pause mode right now. The market is projecting that the Fed is going to cut rates in 2020. So the market is obviously ahead of the Fed, because the Fed's paused. The Fed is still saying maybe they're going to hike rates once or twice. That's the only thing that would throw this thing off, is if the Fed decides to hike rates one more time. That could forestall this bull market in gold. So how and looking at how the S&P 500 performs, that's going to lead Fed policy, because if we see the S&P 500 weaken and roll over again, then we know the Fed's not going to hike rates. They're going to look to cuts. That's obviously very good for gold. However, if the stock market doesn't roll over and it kind of stabilizes and economic data in the U.S. is okay, then, that would push off rate hikes, perhaps for another several quarters. So these are the things that I'm watching so closely. I would just tell people, watch how gold performs against the stock market. That's going to be a great indicator, I think, for the rest of the year to tell us, is the breakout imminent, or, is it not?
Very good. Okay, well, thank you very much for your time today, Jordan. Much appreciated, and we'll have you back on the show again later in the year.
Thank you so much.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip-your-face-off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?